CEOS has made some momentous upside since we last spoke of it. Let's go ahead and find out what could possibly be happening for the coming week. What is up, you guys? Thank you so much for stopping by once again. This is ARCa coming at you with a CEOS, technicals, raw price action, and statistical thread of analysis on this fine Sunday afternoon. Before we get started, please make sure to subscribe to the channel, like the video, and share the video with a friend so that you and them could consider joining our trading community in Discord called ARCa Bulls. With that said, let's dive right into the charts. Okay, but it's going to be first a recap. Let's do a recap, okay? So in order for us to understand where we can go, let's first see where we were, right? What is the past? Here we go. Let's go ahead and start that recap now. If there is FOMO applied to this, a psychological component can actually thrust this further. Okay, if I'm being very clearly, I see these two targets being very likely to being reached fairly soonish. All right, so fairly soonish is what we're looking at here, right? When in relevance to when we were at about, let's see, 0.190, so under 2 cents. So let's go ahead and just fast forward a little bit and continue on the analysis. Check this out. Now, please remember that the overall take profit for this formation is usually found, per the playbook rules, at the genesis of the formation. Okay, so that's signaling about 5 cents, 5.47 to be exact. Okay, so now let's go ahead and get rid of this window and take a look at how the price action actually moved. Okay, so we said from 190 that we were going to be at these targets fairly soon. So let's go ahead and just start that recap from here. Check it out. There's the target the next day. We come back. We start validating our newly converted resistance into support. Then we bounce to the upside, right? We actually touched right there. And that was our target. And it came back and tested it once again. Okay, so now the price action has actually surpassed to the upside. So what could be happening? I just wanted to touch bases on how this was figured, how I was saying that we can per playbook rules, how I was already saying 547. I mean, I was called a pumper for this. I was called a pumper because I said this. Okay, so I was talking about just shy of 200% increase from where we presently were at that moment. Okay, so I don't care what you call me. I'm just I'm playing this by the rules in mathematics. I don't care. You know, it's just the numbers will say what they will. People lie, not the numbers. The numbers don't lie. All right, so let's go ahead and move on to the next chart. Okay, so this is very, very important as well. All right, so this is I actually did speak about this several times. I noticed that we were in a massive ascending channel, and this is actually on the 5-day chart. Okay, so every single candle you see printed here is actually 5 days long, but if it includes the weekend sometimes, so it's 7 days actually. But just know that it actually is a 5-day chart. Okay, so it just means that it's a long time to fulfill this. Okay, so we started this channel. Man, we started this channel September 28th, 2009. Okay, so, and we actually started this analysis on CEOS when we were just about here, I believe. Okay, so, and yeah, that was about 0146, just about 0190, right? So right around these areas is where we were before there was another video still before the one I just showed you. So what I ended up saying was that this could be the bottom. You know, this could be the floor that we had just touched on, and we could be in the process of making a macro reversal. And that macro reversal would actually lead us to a few relevant targets before we can actually realize the true nature of this ascending channel, which is usually bearish. Okay, so, but of course, just like I said before, I wasn't saying that this was going to be a bearish price action. In fact, I was very curious over what it can do. And this was the target of the broadening descending wedge. It should have been 547, of course, but I just wanted to put it into perspective here for you to see where we were going to be from down here. Okay, so huge upside, and we've already surpassed it, so very good. The next thing that I wanted to talk to you about was regarding this indicator here. This is actually a very simplistic way for you to understand what I look at and what I study. I usually track the data of momentum versus volatility. And this is the Crypstex ARC-Series Enhanced MACD, which is an indicator that is named after me, actually. And Crypstex Trading has since endorsed me, and they have granted me access to a bunch of really awesome tools, this being one of them. If you are interested in acquiring the indicators, please go ahead and reach out to me via DM, and we'll go ahead and review the subscription packages together. Okay, so the reason why I'm mentioning this right now is because we were at critical contraction, meaning volatility represented by this red cloud, okay, and momentum represented by the MACD average, the green dots and the red dots. The indicator also has bull and bear signals. So in relevance to the 5-day chart, we actually got a bear signal saying that there was an incoming downside when we were at the opening of this candle here. You can actually see the data right up here. The opening on the O is 08, let's see. Yeah, 0875, so almost 9 cents. And this actually found the bull signal at the opening of this candle, which was at 0160. So huge recovery. Okay, so the thing is here is that we were very tightly contracted, critical contraction in volatility here, and then we started making that upside thrust. Now, upon this massive expansion of volatility, this is now still signaling an upside, and here's the last here's the last green dot iteration. It's still suggesting upside. Now, please notice actually that even the exponential growth on this run here that we actually had from the opening of this candle here, which was, let's see, 0065 to about 48 cents. It's actually not nearly as wide as this is expanding. So this is still suggesting a continuation to the upside, and it's still suggesting a pretty powerful continuation. And I did say that as well. I did say it as well in the previous videos. I said that this is loading up for a very powerful move to the upside. Volume was just out of this world big for it. And I really don't know why or care, because I don't study fundamental data. I study mathematical models, and yeah, you know, it doesn't matter. So I went ahead and actually ran a back test in this, actually on the daily time frame, volatility versus momentum. So now this is the very manual way of doing the volatility versus momentum that you were actually looking at right over here. Okay, so what I did is I ended up back testing the amount of times that we've actually started a contraction phase from critical volatility at full expansion, which is within the 90 percentile. So anytime that we've started a contraction phase and we've started an upside thrust on momentum, I've actually taken note of that iteration's duration, the upside thrust from the firing of the signal, and the amount of times that volatility versus momentum guessed the upside correctly versus incorrectly. And I got a massive amount of incredible data, actually. So, and in fact, I'm compelled to test this from the contraction to expansion rather than the expansion to contraction, and also in a few other time frames. So that actually takes a lot of time, but still this is pretty worth it. All right, so out of a total 30 iterations throughout the entire trading history of CEOS on the daily chart, we have about 24 of those iterations of volatility versus momentum guessing the upside correctly, and 6 iterations were just guessed incorrectly. Okay, that gives us an averaged upside accuracy of 80%, with an average upside thrust of 153.56% over the span of about just under 23 days. This is proof of work. Okay, so if we apply the 153.56% upside thrust from the firing of the signal, which was actually right over here, we actually are taken to 276.37%. So the averaged upside accuracy is probably, this is probably landing near maybe, it's actually landing maybe near the lower end of a first standard deviation. So there are so many iterations here for me to take into account, and I simply just don't have the time for me to be able to do this throughout so many tickers. I'd rather just stick to one ticker and know the crap out of it, right? But the fact that we're at 276% and the upside thrust was the mean, the centered, right? It was 153.56. That leads me to believe that the upper end of a first standard deviation could actually be a lot higher. And this is why I'm actually willing to test or to backtest a 12-hour and also the daily contraction to expansion versus just the expansion to contraction. So let's go ahead and now move on to the next chart and validate to see if we still have any more upside left over based on momentum represented by RSI, right? So we're going to start off like we always do in the immediate short-term time frame. Actually, let me take a look at a single pane first to see if the 12-hour had any divergence, right? So actually, yeah, wow, well, yeah, it actually did. So, for example, I'm just going to give you one. Divergence is actually the opposition of price action versus momentum. Momentum represented by relative strength index, that is. Okay, so from this pivot down here, I can actually see that we've already been stacking and stacking and stacking several iterations of phantom hidden bullish divergence. So, for example, in this area, you can actually see that. Right here. I'm only going to draw one, but I see so many. Okay, so this is hidden. I'm sorry, there's regular bullish divergence. My apologies. So usually when momentum is making a series of higher lows, and price action is making a series of lower lows, you actually get a drive of regular bullish divergence. Okay, so this is what it is, and it's so many of them. We're just being stacked and stacked and stacked, and they are continuing to be stacked even still. Here's another one, and there's another one here, and another one here. So there's so many of them, and this is actually still in play. So now let's go ahead and open up that multi-pane to see just how many time frames do suggest that upside. We're going to start it off with the immediate short term 1 hour. Okay, so the hourly chart is actually taking a little bit of a breather right here, but that little breather I never trust. That actually could be still a continuation to the upside. And looking historically, it looks like we do have prior iterations where we've gone a little higher than that even still. So this is 87.60%. Let's draw a trend line there and just look historically. Okay, so we've gone just a little past that. There we go. So here on, let's see, this was February 28th, 2011. We actually reached about 98.70%. So historically speaking, momentum still has a pretty aggressive upside left over. But remember that this is the hourly, so it's likely to live out pretty fast. So let's go ahead and move on to the 4 hour. The 4 hour is also pivoting, just a tiny little pivot, similar to the hourly, right? So let's just make a trend line right here and just take a look at its the historical values. So yeah, oh wow, look at this iteration here. And this was also, yeah, this was March 2011. And that reached, wow, that actually went to just about 100%. Very, very cool. And yeah, so this tells me that actually CEOS has massive upside potential all the time. So the 8 hour chart is actually still suggesting a straight shot to the moon here. So let's go ahead and make that drawing of a trend line here as well and look at its historical values. Incredible. Look at that. So this is still that March iteration, I'm sure. Yeah, the end of February, early March. It looks like 99.76 in relevance to our current 85.98. Now the daily time frame is also still suggesting a massive upside continuation. Historically speaking, we still have, just like the other ones, we still have massive headway to go. And let's go ahead and move to the 3-day. The 3-day chart is absolutely suggesting a continuation to the upside. And as you can see here, we have iterations, of course, that are just leading to about 98%. Very interesting stuff here. And the 5-day barely entering the overbought percentile right here. And this is very aggressive still. I can only imagine that the weekly and the bi-weekly are absolutely bullish. There you go, weekly and bi-weekly. The bi-weekly, oh man. So the bi-weekly has now just cleared the gravitational zone of the bull strength percentile, which usually would actually pressure us to the downside, but we're well within the bull strength percentile here. We're well within the grips of that. So, yeah, like I said before, like I said weeks ago, CEOS is still in that process of making a macro reversal. And I actually do see a continuation to the upside for this. And if I can be completely honest about where that upside can be, well, the most obvious targets are yet to come. So let's go ahead and just take a fib level real quick, and we'll load up our moving averages and see what we have. So we can take actually a range of a fib, not just a day. So I'm going to go ahead and take this wick high to this wick low here to see what that potential can be, because where we are now could be the not 618 or the one spot 618. So let's go ahead and do this. All right. So yeah, we're just above the one spot 618, the golden mean, which is very good. So the next obvious targets are actually I mean, I want to be as honest as I can be. Okay, I don't want to make it seem like I'm actually trying to pump something, right? Because I'm not. I don't care. So at this point, the most obvious targets would actually be at the top end of these candles here, which actually have a lot of relevance to the 2 spot 618. So let's just go ahead and draw this. Okay, this is going to be a single line. So the 2 spot 618 could be fulfilled fairly soon. With the price action the way it is, maybe within the next session or two. And the next two targets that I'm looking at are actually, they have high relevance with the 3 spot 618. So the 618s are all golden ratios, and it looks like this entire asset has been moving pretty nicely alongside geometric levels. Okay, so. And the final target, of course, would actually be the 4 spot 618, showing us that it has massive relevance with all these candles here as resistance. Okay, so I'm just gonna go ahead and give you that third location for the shorter term time frame. If this thing continues to the upside massively, I would like to talk about those. I would like to talk about those targets later. Okay, you guys, but this is essentially what I'm looking at. And if we're looking at momentum in the, I mean, talking about 15-minute or even the 5-minute micro time frames, I don't usually go there. I don't like to trade tiny time frames like this. It's too much grain. I mean, there could be a small pullback soon. It's just everything is still facing upward, right? So if there is going to be a pullback, then we can actually refer to our moving averages, right? So let's pull up the SMAs and just take a look. Oh man, oh, my goodness, we're way above the 200 simple moving average on a daily. This is this is extremely bullish. And let's see the 12-hour. Okay, so. I'm not sure that we can actually reach that low. The 547 area where we actually just touched the broadening descending wedge take profit area. That's where the SMA 10 is pretty much located. If I put up some EMA 7s, we might be around there too. Okay, so this is a little better actually. So if there's going to be a loading zone, it may be literally right at the 1 fib at about 640. But I would actually look at this as maybe the 663. Okay, so and then if it doesn't actually move to the upside, then the most obvious target would be the 1 spot 618 at 0808. So the best case scenario, I'm telling you, is it's potentially going to be at that EMA 7 at about 663-ish, right? So I'm going to make that line there for you. And the 1 spot 618 would actually be the more likely one for us to find a loading zone before a continuation to the upside. All right, you guys, so please know I'm not a financial advisor. Take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy or sell any assets whatsoever. This video is very long. I apologize about that. Don't fall for the comments saying to WhatsApp me or text me or helpline, none of that stuff, okay, you guys? I need you to do your own due diligence and everything will be just fine. Please refer to the links in the description below if you want to say hi to me on Twitter or Discord. Okay, you guys, but with that said, I wish you well and a great rest of your weekend, and I will catch you at the bell on Monday. Adios.